Hello and welcome to this video, where we'll be discussing the 10 common trading mistakes that beginners often make. These mistakes can lead to significant losses and set traders back in their journey to becoming successful. Avoiding these pitfalls can help increase your chances of success in the market. 1. Not having a trading plan. Having a trading plan is crucial for success in the market. Without one, traders may act impulsively and make emotional decisions. A trading plan should include a clear understanding of the trader's goals, risk tolerance, and strategies for entering and exiting trades. 2. Over-leveraging. Leverage is a double-edged sword, as it allows traders to trade larger positions with a smaller amount of capital. However, if not used properly, it can lead to large losses. Beginner traders should start with low leverage and gradually increase it as they gain more experience. 3. Ignoring risk management. Risk management is an essential part of trading and helps traders avoid large losses. This includes setting stop-loss orders, which automatically exit a trade if it reaches a certain level of loss, and limiting the amount of capital at risk in each trade. 4. Chasing after the latest trend. Just because a certain market or asset is performing well, it doesn't mean it will continue to do so. This is called chasing performance, and it's a common mistake made by beginner traders. Instead, traders should stick to their plan and not be swayed by short-term market movements. 5. Not diversifying portfolios. Diversification is key to reducing risk in trading. By spreading investments across multiple markets and assets, traders can reduce their exposure to any one particular market or asset. 6. Overcomplicating strategies. Simple trading strategies often work best, rather than trying to outsmart the market with complex ones. Beginner traders should focus on developing a few basic strategies that they understand and can implement consistently. 7. Not keeping up with market news. Staying informed about market developments and global events that could impact the markets you trade in is essential for making informed trading decisions. Traders should regularly check financial news sources and subscribe to market updates. 8. Not taking profits. It's important to take profits when the market is performing well, rather than holding on in hope of even greater gains. This helps traders lock in profits and avoid giving back gains in the event of a market downturn. 9. Being emotional. Emotional trading decisions, such as fear and greed, can cause traders to make poor decisions that result in significant losses. To avoid this, traders should stick to their plan, avoid making impulsive decisions, and step away from the market if necessary. 10. Not continuously learning and improving. The markets are constantly changing, so it's important for traders to continuously educate themselves and improve their strategies. This includes reading trading books, attending workshops and webinars, and seeking out the advice of experienced traders. That's it for today's video on the 10 common trading mistakes for beginners to avoid. We hope you found this information useful. If you did, please give us a thumbs up and consider subscribing to our channel for more trading tips and strategies. Thank you for watching, and happy trading. Pro Top 10.